have another renewal for A, the consolidated retained earnings. So yesterday we had the consolidated retained earnings equal to 360,000. Then the second requirement is to compute for the non-controlling interest. So the non-controlling interest depends as to whether it's na-record na whether it's a partial or a full computation of the NCI's goodwill for this. So we have now the non-controlling interest under the partial goodwill. We have the paminta. Then we have the retained earnings, total of 360,000. We are going to deduct or add whatever it is. But this time, we have the undervaluation of the assets of 90,000, which we have in the uh, computation. Yesterday, I gave this also. So, the fair value of the stockholders' equity of the subsidiary on January 1 is 450,000. And then, we multiplied this by the rate of the non-controlling interest. That's equal to 20,000, giving us the non-controlling interest involving partial goodwill equal to 90,000. However, if we are going to use the full goodwill or the fair value basis, we are going to add the non-controlling interest on full goodwill. That's equal to 3,000. Now, the computation of 15,000 is found on the last portion where, but anyway, I can give it to you now. How do we compute the 15,000? No, you do not need to copy because you have this in the solution. How we compute for 15,000? The fair value of the NCI, that's the consideration paid by P 372,000, and then we are going to add the amount paid by the NCI for a 20% interest of 93,000. Total of 465,000 as the total of the fair value of the consideration transferred. And then we deduct the book value of the shareholders' equity of S, capital stock 240,000, and retained earnings of 120,000. The total of 360,000. So 465,000 minus 360,000, the allocated excess is 105,000. And then we deduct the over under valuation of the assets and liabilities of 90,000. The difference is your 15,000 excess of cost over the fair value, or this is now your full goodwill. So that's the amount of 15,000. And the 80% interest on 15,000 is only 12,000. So we are deducting 12,000 from 15,000, giving us the NCI on full goodwill of 3,000. So the non-controlling interest using full goodwill is 93,000. That's requirement number letter B. Now for the supporting computations of 90,000, I have already given this to you yesterday, but anyway, you can again use this. If the fair value in the books of S now is 294,000, I mean the fair value of the assets and the liabilities of S as compared to the book value of 204,000. So the difference of 90,000 is actually an undervaluation. For the undervaluation of the equipment, here we have the buildings and equipment. We have the further analysis. The equipment, its book value is 84,000. The fair value is 180,000. So there is a difference of 96,000. Actually, you have this amount of increase. The fair value is greater than the book value. For the building's book value is 168,000, whereas 360 is the book value, fair value is 144. There is a difference of 216,000 comparing the fair value and the cost, and the accumulated depreciation of 192,000. In other words, there is uh, an overvaluation in the value of the building amounting to 24,000. And so for the summary of depreciation and amortization, inventory for the current year was already used. According to the problem, equipment, 96,000 divided by 8. So annually you charge